What is delayed financing, and how does that work with cash payments?
In the Arizona marketplace, if you're looking to move to Arizona these days, it's a very competitive marketplace, and a lot of times sellers are going to consider cash offers over offers that require a mortgage financing. So delayed financing is a way to come in where you would actually pay cash as a buyer, even though maybe you weren't planning on it, right? So you're going to come in and pay cash, but then also have the ability as soon as you close to go back and get some of that money in the form of a mortgage, and they call that delayed financing.
Okay, so how does this strategy relate to the competition that's out there, where there's investor money and cash buyers?
From a seller standpoint, they're having so many offers these days that they want to get the offer that's going to stick and go through, and that's where the investors and cash buyers can have an advantage over those looking to get a mortgage. So if you can come in and make a cash offer, they don't know you're necessarily going to get a mortgage after the fact, but you just come in and you offer cash if you have the cash, and you're able now to compete with the investors and the cash buyers because you're able to present a cash offer as well.
Okay, can you explain that to me as a home buyer? How does that really look? Like, what do I do?
Well, so it's basically when you're coming in with an offer, if you need a mortgage, you have to present a pre-qualification letter of the mortgage, like what kind of mortgage you're getting, what's the down payment, how you're being qualified. So the buyer, per the Arizona contract, the seller, I should say, is going to be reviewing that as part of your offer. Okay. Whereas if you're paying cash, they're going to know that because there is no pre-qualification letter because a loan's not required. So they're going to know that you're able to pay cash, and it may not, that way it's not going to get hung up maybe on a loan technicality. Let's say it's a 30-day close, and day 25 all of a sudden, oh, my loan's not going through, and then they're stuck. So that's part of the worry or concern of a seller, is that will the loan actually go through?
Okay. So you're saying by delayed financing, you might be paying cash for property, but then there's still the word financing in there. So at some point, financing enters into the picture.
Right. So the way it works is that a buyer would still get pre-qualified. So you'd get pre-qualified up front for a mortgage because your intention is to hold a mortgage on that property.
Okay.
So, but let's say you have the cash, you just weren't, really intending to sink it all into your home permanently, let's say. So you do have the cash available. So what you would do is you'd get pre-qualified for the mortgage you were thinking of getting.
Okay.
You'd want to make sure you're pre-qualified and everything looks good on that. With a mortgage broker like myself, we can get you pre-qualified. But then you go into the transaction, pay cash, but know you're pre-qualified once you close to come back and get some of that cash back in the form of a mortgage, and that's what they call delayed financing. So the biggest benefit really is in this competitive marketplace, the benefit for the buyer or the borrower is going to be now you can compete with the cash buyers, with the investors. So you're able to come in and make a cash offer. So you're going to be able to, probably get, if you really want a home and that, instead of maybe having to offer way over it to compete with those cash buyers. Sometimes a seller will consider an offer, maybe if it's higher than a cash offer, right? Because they're willing to take the risk to get that extra money. Okay. But now as a buyer, you can come in and make a competitive offer. You don't necessarily have to offer more to compete with those investors and those cash buyers. So the big benefit to the buyer is that you may be able to get a better deal because you're coming in all cash.
I see.
And then the other benefit, of course, is that now you're going to be able to go back and get that cash back just like you intended to. So you get the benefit of of competing with cash buyers, and now you've got the benefit of taking out the mortgage and getting that money back, so that you're not sinking all that money into a home.
Why is a cash buyer in a stronger position in buying a house?
Really, the biggest thing is that the seller doesn't have to worry about, is this buyer really qualified and is their loan really going to go through? There's a lot of things that can happen when you're taking out a loan. There can be maybe appraisal issues. There can be borrowing issues. Something comes up in underwriting that maybe that wasn't disclosed, or that wasn't somebody wasn't aware of, and it pops up. So there's things that can affect a mortgage loan, midstream or even at the end, and they're not able to close on that loan. So that's why it is more advantageous for everyone involved, really, and especially the seller. And then that's why they would consider that offer.
What's the process like? Is it pretty seamless to go ahead and segue into the financing? Is that pretty easy?
It is, because you'll already if you're doing it right, you'll already be pre-qualified. You'll already have all of your documentation over to the lender. So really all they're waiting on is for the loan or the purchase transaction to close.
Okay.
And then once it closes, okay, give me a settlement statement, give me a little bit of the paperwork. Now we're able to start the loan, really day one after you close, and you should be able to get that money back in the form of a mortgage within the next 30 days.
Okay, Rick, what about if I just need to borrow just a little bit of money? Isn't that almost the same as a cash purchase?
So the key with delayed financing, Barry, is that you have to pay all cash in order to go back and get that cash back, like in the next month or so.
Okay.
You can't have any kind of loan on that property. So a small loan would mean you'd have to wait 6 months before you can get the cash back. So basically it has to be an all cash purchase, no loan on the property, then you can do it immediately with delayed financing.
Okay, very good to know that.